What's going on, guys? Welcome to the video. Wait, hold up. If you didn't watch the previous video that I did talking about actionable signals, please stop the video, watch that first, and then come back to this video because we're about to get into some juicy stuff, juicier than that previous video, right? So what we're going to be talking about is the second principle of the strat. So without further ado, I don't want to do no long intro. I just want to get into it. We're going to be talking about what time frame continuity is. We're going to be talking about what is the flip and how to use that to your advantage as a trader. And we're also going to be talking about how to use multiple time frame analysis with actionable signals to create a dangerous trading strategy and also avoid the unnecessary losses that you've probably been previously taking in the past. All of that is going to be eliminated in this specific video. So without further ado, let's get into it. So what are we going to cover first? So we're going to talk about what is time frame continuity. So I like to break it down this simple way, right? So time frame continuity, breaking down simply, is your trend is your friend, right? The trend is your friend. Simple as that. The more time frames you have in your favor, the better success you will have in the market, right? So again, the trend is your friend. So remember that, right? I want you to use the time frames as your best friends. Your multiple time frames about to be your new best friend after watching this video. And let me explain why, right? So let me get into what the time frame is. So I want you to realize that every single time frame works together to create what we see as price, right? So if we look at the monthly time frame, right? So this M represents month, right? So this is the NASDAQ futures. So as you can see, this month of November, this was a bullish month, right? It was a 2 up, right? After this 2-2 reversal right here, that's a 2 up month. So it's bullish, right? So this is the monthly time frame. We get out here to the weekly time frame and you see these 4 weeks, so week 1, week 2, week 3, and week 4 make up what we see right here with the monthly time frame, right? Oh, I moved that thing down, my bad. But yeah, so the weekly time frames, the 4 weeks make up what we see in the month, right? And if we zoom in real close right here to see what's happening on this week, you see that it looks like a doji, right? A doji is basically just a candle with a small body, right? It has large upper wicks, small upper wicks, right? So we have wicks going up here. So price went up here, came back down, went down here, came back up, right? So let's look at the daily time frame to see what that kind of looks like. So this is Monday, this is Tuesday, this is Wednesday, and this is Thursday. So as you can see, price opened up around this area, price went up, came back down to this area, went down, came back up to this area, as you can see. So what's happening on the daily time frame is creating the price action that we see on the weekly time frame. And the price action that's happening on the weekly time frame is creating what we see on the monthly time frame. So all the time frames work together to create price. It's like a symphony. It's so beautiful, right? So there's different participation groups. So each time frame that I just talked about, the monthly time frame, the weekly time frame, the daily time frame, right? And then even going down to the hourly and the minutes time frame. These are all participation groups, right? So when I say participation groups, so that means that if you like day trading, for example, right? You might be on the minutes time frame, maybe the hourly time frames. But if you're like a swing trader, right, you like to hold trades for a couple of days, a couple of weeks, then you might be primarily on the daily, weekly, and the monthly time frame. If you're an investor, you might be on the weekly, monthly, and yearly and quarterly time frame, right? You might be on the bigger time frames. So these are different participation groups. So based on what time frame these different traders and investors are looking at, right, and trading off of, which dictates how price basically moves. So let me break that down a little bit. So the monthly time frame shows us who's in control on the month. So if I go over here to the monthly time frame, who is in control this month right here? Who is in control? Buyers, right? It's a 2 up and it's a bright green color, like buyers are in control, right? So buyers are in control on the month. So the monthly participation group is bullish, like they are in control on the buying side, right? So weekly shows us who's in control on the week, right? Daily shows us who's in control on the day, and the hourly shows us who's in control right now, right? It shows us who's in control on the hour, but if we're day trading, it shows us who's in control right now. And I'm gonna explain what that means in a second. But time frame continuity, trading that will make you way more money and also avoid you losing way more money than you need to, right? Let me pull up a chart real quick. So if we go here, this is on the hourly time frame, right? As you can see, this candle right here from 8 o'clock, because it opens up down here at 8, right? If you see the thing, it says 8 May 20th, 2024, right? So what happens is price opened up here, went up a little bit, and then came all the way down. So this hourly time frame, this candle was a 2 down first off, and it was bearish. So anybody that was trying to buy during this time frame got cooked. Absolutely, like just cooked immediately. Let me show you what I mean. So this is bearish, right? So this is also showing on this time frame as well. So this is the same thing, but I just went back in time to show you what that looks like. So if I drop down to, let's say, the 5-minute time frame, right? Or let me keep that and go down on this time frame. Yep, there we go. So as you can see, if you look at the mouse, like where it's going, keep looking at that. So as you can see, the new hour opens up right here. Boom. So this is 8 o'clock. Then we got 8:05, 8:10, 8:15, because it's the 5-minute time frame. So price ends up going up a little bit. Then it comes back down. So we have a 122 rev strat, which goes down. And it's funny because I'm going to talk about this a little bit later, but this did an actionable signal, a 122 rev strat in the direction of time frame continuity, right? So who was in control? Where was price continuing at that point, right? It was about to continue bearish, right? So the hourly time frame, once price got below 18,682, then the hourly time frame was bearish. So the goal was, all right, the 122 rev strat can trigger, let's go on the 15-minute time frame, can trigger this outside candle right here. So this outside bar, which will trigger the 2-2 reversal right here on the 30-minute, which will trigger the 2-2 reversal on the hourly. You see how beautiful that is? It all works together. So on the hourly, this is what's happening. On the 30-minute, this is what's happening. So we have a 2-2 reversal. 15-minute, price broke the high, and then it went outside. So let's mark this out. I really want to show y'all this is literally happening like in real time, right? So remember, price opened up right here for this candle. Price broke the high. And then what did it do? It came back inside, and then the next target was going to be targeting an outside candle, right? Creating an outside candle. If we look on the 5-minute time frame, what happened? Price broke up, did a 3-1-2, and then from here it came back down. Where will we enter? We will enter right here, short position, stop loss right here, and then move it to break even later on, and then boom. Now what we're doing is when this thing goes 122 rev strat on the 5-minute, that triggers what's happening on the 15-minute, and it goes and becomes an outside candle, and it becomes bearish, right? It's a bearish outside candle now, which triggers the 30-minute, which triggers the hourly, right? You see how that works? You see how all of it works together. But if you are going against time frame continuity, you will lose. So in this case, when you go with time frame continuity, the hourly time frame is bearish, 30 minutes bearish, the 15-minute is bearish, you're going in the direction of time frame continuity, you would have made a lot of money on this trade. Right? Let's say you enter like right here, right? And you just took profit, let's say down here, right? That's a 37-point move, right? So you made a lot of money. Now, if you fight time frame continuity, that's when problems start coming up, right? Let me show you what I mean. So right here, this is a 2-1. And then remember, I said threes start off always as twos. So twos, watch this. A price became a 2 because it broke this high. So it started off as a 2 up, and then it came back down and became an outside candle, a bearish outside candle, right? So someone would have probably taken like, oh, this is an actionable signal. Like if I go back here to the Strat cheat sheet, it says right here that this is a 2 down, inside candle, 2 up. Okay, that's a 2 down, inside candle. So price broke the high, boom, that's a 2 up. I'm gonna take that thing to the upside and I'm gonna target this high. No. Yes, it is an actionable signal, but here's the problem. It's going against time frame continuity, right? Time frame continuity, if we look at my mouse matched up on this time frame, matched up with here. If we entered here at this price on a 2-1-2 bullish reversal, meaning we're entering to buy this thing, right? Look at what color the hourly time frame is at that point. It's bearish. It's bloody. Look at where my crosshair is right here. The crosshair, this is where I'm entering at. The hourly time frame is bearish. The 30-minute time frame bearish, 15, like all of that's bearish. I'm fighting time frame continuity. So this is the example of I'm trying to go to Chick-fil-A, but my 4 friends, the 15-minute time frame, the 30-minute time frame, the hourly time frame, and probably at this point, probably the daily time frame too, they all trying to go to Chipotle. So I'm trying to fight time frame continuity, aka I'm trying to fight what the other participation groups, aka my friends, are trying to do, instead of just going along with it. Like, all right, you know what? That's fine. Y'all want to go to Chipotle? Bet. I'll go to Chipotle with you. This is when I say I'm going to Chipotle with you, I'm going to take a 1-2-2 rev strat and continue down with you guys to the downside. AKA, I'm going to go with you guys to Chipotle since you guys are going to Chipotle. Does that make sense? Like, you're going together with them, right? So that's what I mean by going in the direction of time frame continuity instead of going against it. Because when you go against it, literally a perfect example, you get cooked, right? You get cooked immediately. So that's what I'm saying. The hourly is talking about what is happening right now. So that's how we use that to our advantage, right? So let me show you something real quick just to also paint the picture a little bit better, right? So the bigger time frames are strong, but the smaller time frames can trigger the bigger time frames. So if you see right here, it's like small dominoes hitting the bigger dominoes, right? So we got the minutes time frame, the hourlies, the dailies, the weeklies, the monthly, quarterly, and the yearly, right? And then we can get like 5-10 year, but you don't gotta get that big, right? So these are all the participation groups pretty much, right? So the minutes can trigger. Remember I said I entered right here, the 1-2-2 rev strat on the 5-minute time frame to eventually come down here and trigger, right, the hourly. So like what's going to trigger the hourly to go to reversal when price breaks below this low at 18,668.75. So this will be, if I go on, this will be the hourly entry, right? So when price breaks below this level when price breaks below this low, the hourly will be a 2 down, making this a 2-2 reversal to the downside. So let's go on the 5-minute. What does that look like? I gotta ask myself, okay, can the 5-minute time frame trigger this hourly 2-2 reversal? And the answer is yes, it can. Because why? First off, the 5-minute is bearish. If we go to the 15-minute time frame, the 15-minute is also bearish, and it's about to go outside. So remember I said threes are expanding, right? Inside candles are contracting. They're smaller. They're tightening ranges. And then threes are expanding. They take out highs and lows. So they expand in price by nature. So what do? We took out the high, and now we're going to expand and come take down the low. So that increases the likelihood or the probability of the minutes time frame knocking over the domino of the hourly time frame. So in this example, the 1-2-2 rev strat on the 5-minute time frame came and knocked over the time frame, the 2-2 reversal, aka they triggered the 2-2 reversal on the hourly time frame. So if you go on the hourly, boom, what happened on the 5-minute time frame triggered this on the hourly, right? And then from there, that's where we have the domino effects. If the hourly keeps going, it can trigger something on the daily. And then if the daily keeps going, it can trigger something on the weekly, and then the monthly, and then the quarterly, and then the year. Like, that's how it works. It starts with the minutes and goes all the way up to the yearly, right? So that's why we use time frame continuity for. So you might be thinking, well, do I have to wait for all of the time frames to be going in the same direction for me to take a trade? No, you don't have to work for every single time frame, but you should be looking at most of the major time frames to do it. So like I always say, and this is the way Rob Smith taught us, it's best to have at least 4 time frames going in the same direction, right? To have full time frame continuity, right? Full time frame continuity is at least 4 or more time frames going in the same direction. 4 or more time frames going in the same direction is full time frame continuity, right? So you want to have at least 4 time frames going in the same direction. So if I'm on a 5-minute, watch this. If the 5-minute is bearish, so if I go on the 5-minute, that's bearish. 15-minute is bearish. 30-minute is bearish. And now the hourly is also bearish as well. So like there's 4 time frames that's going in the same direction. I might not have the craziest target. Like I'm not going all the way down here. But I'm at least going to go try, based on these time frames that I see, to trigger the hourly time frame. Right? So does that make sense? Like use multiple time frames. So at least use 4. Right? Use 4 time frames. So individually, the lower time frames are weaker because they are smaller. But if they can trigger the higher time frames to trigger more higher time frames, then you can get a shot. So if the minute triggers the hourly, that can trigger the daily, and then so on. So that's how we use time frame continuity to basically just catch these beautiful trades. So now that I've covered that, I want to talk about what is the flip, right? So that's also pretty simply put too, right? So the flip is any new candle opening. Simple as that. Like any new candle opening, that's the flip. So let me show you this real quick. So I'm on the replay mode and I'm in the hourly time frame. So if I go forward, right? So this is 8 o'clock to 9 o'clock. Once this new candle opens, that's called the flip, right? The flip is when any new candle, I don't care if it's the hourly, 5 minute, 15 minute, like daily, weekly, whatever, it doesn't matter the time frame. When a new participation group starts, right? AKA when a new time frame opens up, that's called the flip. So in this case, this was the 8 o'clock to 9 o'clock hourly candle. The flip happened at 9 o'clock because the hourly time frame is like each hour. So 8 o'clock, 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock, right? So the flip happens for the hourly time frame each hour. So the flip happens on the 15 minute every 15 minutes. The flip happens on the 5 minute every 5 minutes. So if I drop down to the 5 minute time frame, for example, the flip happens like literally just every single, the flip happened here, the flip happened here, the flip happened here. So you might be thinking, well, what does that have to do with anything if it's just all these flips are taking place? So what we do is we use the flips all at the same time. So we want to use them cohesively. So let me show you real quick. I'm going to pull up, let me actually bring this over. I shouldn't be doing it because I put this together in the course, but I'm just going to show y'all this. I'm going to show y'all. So if I'm gonna go here, this is time frame continuity example, right? So let me show y'all, where's the flip? I have it somewhere here. Oh no, it's not on that one. Okay, that's why I was about to say. Okay, so I'll break it down like this. So I'm gonna use where's the drawing tool at? What I'm gonna do is I'm gonna literally draw like what it means. So let's say, for example, this is let's say these are 15-minute intervals, right? So on the 15-minute time frame, a new flip happens basically 4 times, right? Because it's going to be a flip here, flip here, flip here, flip here, right? So that's the 15-minute. Now, the 30-minute, if we break it down like this, it's going to be a flip here, right? Because there's 2 15 minutes within a 30-minute time frame. And then the hourly, obviously, is just going to be 1 hour. So they all have. So what we want to do is say, all right, when do certain time frames or certain participation groups open up at the same time? So for example, if we go to, let's say for example, this is 9:30, right? This is 9:30. The 30-minute time frame happened at 9:30. Why? Because it happens from let's say 7:30, 8, 8:30, 9, 9:30, right? Every 30 minutes, a new flip happens on the 30 minute. Every 15 minutes, a flip happens on the 15. So let's say 9 o'clock, 9:15, 9:30. So watch this. The flip happened for the 15 minute at 9:30, but it also happened on the 30 minute, and it also happened on the hourly. So there's multiple flips happening at one time. So now I can see if all of them, for example, let's say price opens up at 9:30 right here. It immediately goes bullish. Watch this. The 5 minute is bullish. The 15 minute is bullish. The 30 minute is started off bullish too. And the hourly started off bullish. Watch this. Why are they all bullish? Why do they all just kind of just look like they were just in sync? Because they opened up in sync. They literally opened up at the exact same time. So the participation groups that we're trying to get in, not the hour, my bad. If I said the hourly opens up at 9:30, it doesn't. It opened up at 9, right? It'll open up a new one at 10:30. But the 30 minute, 15 minute, and 5 minute opened up a new candle. They flipped, right? So the time flip basically just means, all right, when is everybody going to meet up at the same time? That's basically what it means. The time flip base, when are more than one time frame going to basically trigger or happen at the exact same time? That way we can use it together. So in this case, if we're on the 5 minute time frame, what do I see? I see price breaks the low and then it comes back up and breaks the high, right? So that it's becoming an outside candle. So if it's becoming an outside candle on the 5 minute, let's see what's happening on the 15 minute. Oh, the same thing's about to happen. Took out the low, took out the high. 30 minute time frame, what's about to happen? Oh, it took out the low, took out the high. So the flip is creating the same bullish pressure. So whoever's buying on the 5 minute, whoever's buying on the 15 minute, whoever's buying on the 30 minute, they're all doing it at the same time. That's what the flip is basically representing, right? So that's basically what the flip is, right? And again, it's a little bit harder to explain. So again, if you have any questions about that in the comment section, I'll actually do a separate video on that. But again, you can still use time frame continuity without it. The big thing right here that I want to get into is how to use multiple time frame analysis with actionable signals, right? So I've talked about that literally right here. I already kind of got into that a little bit. So right here, I told y'all, so let me go pull up the Strat. Where is it at? Am I tripping? Oh, I gotta add the thing. I think I took it off, that's why. Candle type the Strat. So if you guys haven't added it, you can add it like that. Candle type the Strat. You can see this is a 1 inside candle, 2 up, 2 down rev strat. So if I go over here to the actionable, the chart, the Strat cheat sheet, let's go over here. Look at this. Inside candle, followed by 2 up, 2 down, rev strat. What is that? Inside candle, 2 up, 2 down, rev strat. So where are we going to enter at? We're going right here. Why? Because it's supposed to enter right there. And then where's the first target? Right there. So where's the first target? It's going to be right here. Boom. And then the next target after that is just the subsequent lows. So what we do is we use multiple time frame analysis to say, all right, this is what's happening on the 5 minute, right? And then this is what's happening on multiple time frames. Actually, if you can, I recommend you guys getting the multiple, I think the Pro Plus version of TradingView. That way you can have multiple charts. Let me actually show you my other chart. So if you get the Pro Plus version of TradingView, you'll be able to get multiple time frames, have multiple time frames up. So you'll be able to see all of them at the same time. So for example, if you see right here, NQ is bullish on the month, and then right here it's bullish on the week, and then we got what's happening on the hourly, and then what's happening on the daily, right? So let's just go down, let's show you like how to use multiple time frame analysis with each other, right? So if we see right here, let's use this example right here. So as you can see, price is coming up. You see price is setting up. It had a failed 2 down right here on the daily time frame. Price came down, right? It might be hard to see, but I'll draw it out. So boom, price took out that low. And then after that, price ended up being bullish. So that was setting up for a 2-2 bullish reversal. So where are we going to enter that trade? We're going to enter it right here. When price breaks above the high of this 2 down, that's where we're going to enter targeting the high. So again, just look at the Strat cheat sheet. If you don't have the Strat cheat sheet yet, just hit me up on Instagram. I'll put my Instagram in the description. Hit me up, follow me, check me out, and then I'll just send it to you, right? But this is the 2-2 reversal. So price goes down, price breaks above the high, boom, price goes up, boom, just like that. So that's what we're going to do right here. That's what we're looking for. 2-2 reversal. Now, before you enter this trade, ask yourself and look at reference literally where you're entering in combination to everything that you're seeing. So let me get rid of all this real quick. Let me get rid of these right here. Ask yourself, all right, what, if this triggers, does this have the ability to keep, watch this, because right there at this point, look at that, look at the weekly time frame where this entry is. The open of this weekly candle was right here at 17,865.75, right? So below that point, this candle was bearish, right? This candle was bearish. It opened up right here. It came down, right? And now it's coming back up. So you got to ask yourself, does this daily reversal setup right here have the ability to create, watch, what are we creating? A 2-1-2 bullish reversal on the weekly time frame. How do we create it? By doing this. If price breaks above this inside candle right here, the high of this inside candle, that is now a 2-1-2 bullish reversal, and above that level, price is in force, right? So let me explain what that means too. So in force, if I ever say in force, or you ever hear any stratter say in force, all that means is whatever this trigger is, it just means above the entry. That's all it means. So if we enter right here, as long as price is above 17,755.25, that means price is in force. That's all that means. That means the 2-2 bullish reversal is in force on the daily time frame, right? In force just means it's going in that direction, right? Simple as that, right? So let's say you set the directions in your GPS while you're in the driveway. As soon as you leave the driveway, you're en route. That's the same thing as being enforced, right? That's all that means. As soon as you leave the driveway and you stay left in the driveway, then you're good. But if you get back in the driveway or you start backing up into the garage, that means it's no longer enforced, right? You're no longer going en route to that destination or that direction, right? So that's what that means. So you gotta ask yourself, all right, can this daily time frame, if we break above this high on the daily time frame, can we trigger the weekly participants to go bullish? And the answer to that is yes. We have the room. Like, this is not that bad, right? So if we measure, even if we just measure the size of these candles, right? If we just measure from here to here, if we bring this up, oh yeah, it definitely has the ability to go up. Like, how many points is that? Like, that's only like 172 points. It has the ability to, in a day, to move in that direction. So we're going to take that setup to the upside, right? So we're going to take the entry to the upside. Our stop loss is going to be at the low of this candle right here. So it's going to be a stop loss right here. And then we're just going to trail our stop loss up. And then we're just going to keep holding that trade. And then watch this. So the monthly, look at this. This is so beautiful. The monthly candle opened up right here. This is where the monthly candle opened. So the month opened up right here. So anything above this price, the monthly participants are bullish. The month is bullish, right? Anything above this level is bullish. So watch this. The month is already bullish. The weekly was bullish this previous week, but right now it came down slightly. So now the daily is bullish, and now it's about to go bullish again. If it can go bullish and create a bullish reversal and do a bullish actionable signal to the upside, can they trigger the weekly participants, aka the weekly time frame, to go in force to the upside, aka do a 2-1-2 reversal to the upside and stay above the entry? If the answer is yes, then that is a great trade to take, and I'm going to take that. So watch this. If you took this trade from this point, let's say you took the trade here. Let's say you took the trade on the daily time frame. We can go down to the hourly. Let's go down to the hourly real quick and see what that looks like. So on the hourly time frame, this is kind of what it looked like. So we would enter. It's so beautiful because, like, there's so many ways to enter. So right here, price broke above this level right here. You can just look for a bullish actionable signal on the hourly time frame. So like, watch this. The daily time frame is going to be 2-2 or bullish reversal above this white line. So what hourly setup can we take to trigger the daily time frame going 2-2 reversal to the upside? I see a 2-2 bullish reversal right here. Okay, let's take that. Let's take this bullish reversal right here. Boom. Into this trade right here. Where's my entry going to be? Right here. 2-2 bullish reversal. Into this on the hourly time frame. Once this goes 2-2 reversal bullish, boom. We go bullish. We went up. You might be thinking, well, Ashawn, it went a bearish reversal right here. Am I going to exit that trade? You can. Well, watch this. I know one. This is so beautiful. You can. This is why I love futures. Like, I recommend anybody that's trading the Strat, please try out trading futures with this. It just makes it so much more. It's really powerful to use it with futures. Here's why. So you can enter this trade on the hourly time frame. Right here. Enter the trade on the hourly time frame. And this is what you can do. This is literally what I always do, and Rob Smith preaches this all the time. If it doesn't go in your direction immediately, cut it immediately. Like, if it don't go, like, if it breaks and then pulls back, look, nope, cut it. Because as soon as it breaks, it should just fly. It should just go in that direction, right? It should just fly in that direction. If it doesn't, it's probably gonna pull back. So just get out of break even or a small loss, and then look for a re-entry if you have to. So watch this. This is what happens. We enter right here, boom, price comes up, boom. What does price do? I put my stop loss at break even. What does price do? Price comes back down, wicks this entry, boom. I lose nothing. I lose $0 because I set my stop loss at break even. So boom, I exit the trade, lose nothing. I'm still gonna look for a bullish setup to enter the trade on. So right here, what do I see? I see a 2-1-2 continuation right here. So let's pay attention to that. So what are we supposed to do in this moment? Let's go. Let's just go, hold on. I'll zoom into this one. Let's go to the Strat combo sheet just to make sure I'm not cheating. You know what I'm saying? Let's make sure I'm not cheating. So what are we looking at? We got to do, if I'm not mistaken, that's a 2-1-2. So a 2 up, inside candle, 2 up. Okay, what does that look like? Where is that at? Where is it at? 2 up, yep, 2 up, inside candle, 2 up. So what are we supposed to do? Enter here, target here, take some profit, and then leave runners. Cool. So what do we do here? Boom, enter the trade here, take profit, leave runners, move stop loss to break even. What does it do? I take profit here. I'll take a little bit of profit off my trades. So let's say I had like 2 or 3 contracts. I would take 1 contract off right there, set the rest of my stop loss at break even, and then I just let the trade run. It pulls back down, cool. I get stopped out at break even. So I might either have a little bit of profit or I'll just get stopped out at break even and I'll lose nothing again. So that's what I'm saying. It's so beautiful to do this. And why, like you might be thinking, well, why are you forcing it? Like, why are you taking all these different trades to enter a bullish setup? Because the daily is bullish, the hourly is about to be bullish, and the monthly is bullish. Monthly is really, really, really bullish. Like, it was crazy bullish, right? So let me just for context. This is what we're seeing. It's bullish on the monthly. It's setting up for a 2-1-2 reversal on the weekly. We had a huge bullish week previously. And we're literally right there about to trigger and go 2 up on this next week. And right here, this is also setting up for a 2-2 reversal. So as soon as it goes above this point on the daily time frame, guess where we're going? To the upside. And guess where the target is for the daily time frame? Right here. Right here, we already said right there. So the next target for the daily time frame is all the way up there. And right here. So I'm going to take those trades. So right here, that's what I'm saying. It allows me to, like futures combined with the Strat, it just allows me to just manage my risk so much better. So right here, what do we see? A 2 down, 2 up reversal. So now, guess what I'm about to do? Guess we're about to enter. Hourly, that's what the H is for. Hourly, 2-2 reversal to the upside. I might take a little bit of profit right here or maybe right here. Leave runner, and then I'm moving my stop loss to break even. So like, boom, let's do this. Entry right here. Stop loss here. I take profit right here or right here at one of these previous highs that I think is going to be able to hit. Move my stop loss to break even. What does price do? Flies. Boom. Triggers the week. The weekly triggers on at this purple line right here. The weekly triggers. So let me actually, I'll get rid of these lines because it's probably a lot of lines right now. So this hourly blue line, we entered a 2-2 reversal, which triggered what? The 2-2 reversal on the daily time frame, which was right here, which triggered what's happening on the 2-1-2 reversal, bullish reversal on the weekly time frame. So above the purple line, weekly time frame is enforced. Above this line right here for the daily time frame, the daily 2-2 reversal is enforced. Above this light blue line right here for the 2-2 reversal, the hourly 2-2 reversal is enforced. So now everything is just triggering each other. It's just a domino effect. Remember I said, where that domino thing at? It's a domino effect. This is what I'm talking about. The hourly triggers the daily, which triggers the weekly, which triggers the monthly. The hourly triggered a 2-2, watch this. The hourly triggered a 2-2 reversal, which triggered the daily time frame, which triggered the weekly time frame, which eventually, after a while, what do we do right here? We triggered the monthly time frame. 1 month time frame, 2-2 reversal bullish right there. And right now, like literally today, we are in force above the monthly time frame bullish. Time frame continuity. Using time frame continuity with actionable signals literally just makes your trading, first off, it makes it so much better. It allows you to be confident because you know where price is going. You know where to target. You know exactly where your targets are. You know exactly what needs to get triggered and what can get triggered or not. And you know what to enter and what not to enter. You know exactly. Like there's no like, oh, well, what about this and what about, no. Like the minutes, hourly, daily, weekly, monthly, quarterly, yearly. What are all of the groups doing? How can the minute affect the hourly? How can the hourly affect the daily? How can the daily affect the weekly? How can the weekly affect the monthly? That is the only question you should be asking yourself. And then the next question you're supposed to ask yourself, what actionable signal can I take on one of these time frames to trigger the next time frame? That's it. That's time frame continuity, multiple time frame analysis, using actionable signals in a nutshell, right? So again, I hope this was helpful. I hope this is powerful. Please rewatch this video over and over again if you need to. Again, this is a very powerful strategy. If you use this in combination with actionable signals, time frame continuity with actionable signals, it will literally make trading a game changer. I promise you. So I'm gonna wrap the video here. If you guys have any questions or anything, drop that down in the comment section. If you like this video, subscribe. If you want to be a part of my future trading accelerator, I'll be teaching you guys the strat in depth. Like you see this stuff right here, I'm gonna be teaching stuff in the strat in the accelerator in depth, and I'll be teaching you guys about futures and how to use the strat with futures to pass accounts and grow your personal account. So I'm gonna be going crazy with that. If you wanna fill out, I'm probably gonna do 10 spots. That's it. Because I can handle 10 people, because I'm going to be literally like hand holding a lot of people inside of this to be able to pass futures and pass their futures trading account, and also just grow their account in general. I'm going to be hand holding a lot of people. So fill out the waitlist form in the description. And yes, I'll see you guys in the next video, because I'm going to go into the third principle in the very next video. So stay tuned.